Hey everyone, my name is Riley, and in this video, we will be taking a look at all of the different trading bots on Bybit. There are 4 different trading bots that we have to choose from. We have the Futures Grid, the Martingale bot, the Spot Grid, and the DCA bot. This video will show you in detail what all of these bots do and how you can use them to potentially make some profit on Bybit. Before we jump in, if you do not yet have a Bybit account, you can sign up to Bybit using the top link in the description, and this will give you a bonus of over 6,000 USD when you sign up to your account. So once you have either signed up or logged in to your Bybit account, to access the bots area, all we need to do is go up to tools along this top bar, and then we can see the trading bot section right here. So let's go ahead and click into this, and then we can see the different bots that we have. So the 4 bots that we have is a Futures Grid, Futures Martingale, Spot Grid, and DCA. And I'm going to explain all of these bots, what they mean and what they do. Now, the annoying thing about Bybit is if we click into the Spot Grid, for example, unlike some other exchanges, they don't show you like an actual representation, like a graph right here, of what this bot is and what this bot does. So I'm going to explain what these bots are over here on TradingView. So let's take Bitcoin right here. And I'm going to explain the Spot Grid bot. So essentially the way this works, if we take Bitcoin right here, is we are going to have a price range. So we can see the price range on Bitcoin right here is between 60,750 and 74,086. So let's go ahead and mark this range in. Now this is not going to be exactly precise, but we'll put it near enough. So we have 60,000, we'll just go here, 60,761. This is the bottom range right here. And then we also have the top range of 74,000. So let's go ahead and mark this in as well. So we can see right here that this is the range that the Spot Grid is going to trade within. Now, essentially the way that the Spot Grid works is it's made up of different buys and sell orders. And these are what we call the grid. So I'll go ahead and mark this on. Let's start out with the buys. And just for reference, this is not going to be drawn accurately to scale, but this is just to show you what the bot does. So we can see, for example, the interval is 666 USDT. So that is the actual interval, but I'm not going to be using this parameter right here. I'm just going to show you how this works. So what we would have is we would have a bunch of buy orders in right here that look something like this. So we can just mark the buy orders in right here. And then in between the buys, we are also going to have a bunch of sell orders as well. So we might have a sell order here. Let's mark these as red. A sell order here. A sell order here. And so on and so forth. Basically, in between all of these buys, we're going to have sell orders. So the trading grid is going to look something like this if you could visually see what this grid looks like. Now, how this works is we can see right now that the price of Bitcoin is right here at 67,333. So let's say the price goes down to this level right here, this buy order. What the bot is going to do, and by the way, when you set this up, this is running 24 hours a day, it is running constantly. But as soon as we hit this level where we have the first buy order, we are going to automatically buy some Bitcoin right here. Now, let's say the trade doesn't go in our favor. We have some Bitcoin, but it drops to this level. So we now have a sell order. However, because we are not in profit, and if we were going to sell here, we would take a loss, the bot is going to hold. It's not going to let us take a loss here. So we just keep the Bitcoin, we don't make a sell at this level, and then let's say the price falls to this level. Then we're going to buy some more Bitcoin at this level right here. So far we bought at this buy order and we bought at this buy order. Now let's say the price goes up to this level right here. We are going to place a sell order, but the bot is only going to sell the Bitcoin that we bought here because this is now a profit. So we came here, we bought, we came here, we bought, we came here, and it's only going to sell the Bitcoin that we bought at this level, and it's going to hold the Bitcoin that we bought at this level. Then let's say we continue to rise, and we go to this level. We're now going to buy some more Bitcoin at this level, and then let's say we go up to this level, this sell order. Well, now the bot is going to sell the Bitcoin that we bought at these 2 levels, because we are now in profit. Then if we continue to rise and go in the right direction, well, it's pretty simple. We're just going to buy here, we're going to sell here, we're going to buy here, we're going to sell here, and this goes on and on. So this can be a very effective trading strategy as everything is done on autopilot. So right now you might be thinking, awesome, this just seems like a trading strategy that we can't really lose because we are just going to diamond hand and hold this Bitcoin until we actually go back up to a level. Well, it does sound awesome until we actually trade outside one of the ranges. So let's just say Bitcoin went on a drastic fall right here and we buy at this level, continues to fall. Obviously we don't sell here because we are not profitable. We buy more here, we buy more here, and we buy more here, and then we fall out of the range. Well, at this point, the bot is going to stop trading. As soon as we go below this level, the bot is automatically going to stop trading, and we are going to be left with all of the Bitcoin that we bought at these previous levels. And basically the way that this strategy works, and the way that this strategy is the best, is if we are trading within a range. So we can see on the latest level of Bitcoin right here, on this latest price action, this is perfect. From here, when we came into the range, look how much profit we would have made. We bought here, we would have made a profit. We bought here, we would have made a profit. We buy here, profit, and so on and so forth. So you can see when the price goes up, or even when we go down, we are going to be very, very profitable in these levels. So this move right here looks pretty bad at first, right? We can see that all the way down, we would have just been buying more Bitcoin and the price continues to fall. But at this point right here, when the price goes back up, we would have made a lot of profit because all of the Bitcoin that we bought on the way down, we can now sell on this way back up. Now, if we go above this range, like if we were to come out of this area up here, that's no problem because we made so much profit in this area. Well, all we have to do is we go back into here and we set up a new bot that is within the new price range. So really the only way that we can lose with this strategy is if price falls all the way down and comes out of the trading range to this bottom level. And even then, like for me personally, and this is not financial advice, I would not really be too spooked. I would just diamond hand my Bitcoin. I'm very confident that we are going to go over this 74,000 level at some point. So cool. I would just hold my Bitcoin until we go back above that area. And then hopefully I would take my profits there. So that is how the spot grid bot works, and hopefully that gives you a much better understanding. Now we can see that by default, they are going to give us an AI strategy. So this is going to determine the price range that we are in, how many grids are going to be on the chart, the interval between each buy and sell order. So we can see right here, the interval, the space between, so here and here, would be $666. We then have the profit and grid, so how much profit we want to take on each trade that we make. So basically every time we buy and then sell and make profit, we are going to be making 0.9 to 1.09%. We then have the grid profit ratio. So this shows that AI has basically backtested this over the last 14 days, and this is the profit that it has made. We then have the drawdown ratio is 4.17%, and the volatility ratio, basically how volatile Bitcoin is 60.15%. So these parameters are just for this option right here. However, if we go down, we have some different strategies that AI has come up with, and watch how this strategy changes right here. So if we flick to this one, we can see the grids has changed from 20 to 21. The interval is slightly smaller, going from 666 to 635. But basically, the main difference between these is going to be the APR. So if price stays the same and trades within this range, how much are we going to make over the next year? And that's what we can see right here. So you can either go down, we can look at all of the parameters, we can look at the APR, we can look at how much profit this has made over the past 14 days. And we can choose from one of these AI parameters right here for which one we want to go for. Like this one is a major difference. We can see between this top one, we have an interval of 666. And then this one down here, the high frequency bot, is going to change this to 375. So we're going to be making trades a lot more frequently. Alternatively, we can flick this over to manual and we can choose our own filters. So we can even choose the price range. Let's say that instead we actually want to trade between this level right here, so 50,000 all the way up to 80,000. So we could change the price range right there. We can also change the amount of grids. So the amount of grids that you have on your chart is going to affect the interval. So we can see, let's change this from 30 to 20. And we can see the interval is going to change right there. So it is completely optional if you want to set this up manually, but I would recommend going with one of the AI strategies. They are backtested by Bybit. For example, we can go for this one. choose how much we want the bot to be able to trade with. So I could say 200 USDT, and then all I would have to do is click on create now. The reason it doesn't let me is simply because I don't have the funds in my account. But that is how the spot grid works right there. Now, if we go back to the homepage, we can see we also have a futures grid. So this is a lot more risky, and essentially you can get liquidated in this area. So with the spot grid, this is just buying and selling regular Bitcoin right here between all of these price ranges. But the futures grid is going to do this with leverage. So it's a lot more risky, but you can make a lot more profit. So we can see straight away the APR with this one right here, with this futures grid, is 88%. So I think the other one was like 35% on the spot grid. So you can see a massive difference right here. However, once again, this is more risky. You can make more money, but you can also lose a lot more money. So keep that in mind. Also, with the futures grid, we can choose whether we want to go neutral, long, or short. So with the spot grid, let me just pull this up once again. With the spot grid, we are only going to be going long. So what this means is we are only going to be making a trade, and we are only going to be buying at these buy levels right here. So we buy here, we buy here, we buy here. But with the futures grid, if we go short, instead of buying at the buy positions, instead we are going to be shorting at the sell positions. So this means if we think the Bitcoin price is going to go down, this is going to be a better option. Because what we would do is we would sell at this level, then we would buy back at this level and make profit. Once again, we would sell at this level and buy back at this level. So if you think the price is going to go down, this is a much better option as you're going to be making more profit. But if you go with short and then the price goes up, and basically you could short, and if the price goes beyond this range, well, it's not going to be very pretty. Alternatively, with the futures trading, we can also go neutral. So this is going to give you some crazy trades, and this is going to be trading very, very frequently. But basically what this means, you're going to be buying and selling at both of these levels. So that is how the futures grid works. You can either go short if you think the price is going to go down. You can go long if you think the price is going to go up. Or you can go neutral if you think we are going to be trading in between this range for a long time. And if you go neutral right here and we trade within this range, you'd be making a lot of profit in these areas. But once again, the screen is the exact same. We choose the grid that we want to go for, or we can go manual right here and set the parameters ourselves. And that is how the futures grid bot works. Now, the next thing that we are going to talk about is the Martingale strategy. Now, the only way that we can trade Martingale is with futures, so keep that in mind. We don't have a spot Martingale on Bybit. So with Martingale, we are specifically trading with leverage and futures. Now, if you have never heard of Martingale before, it originally came about as a gambling strategy. The guy who created it for gambling, but it can also be used very well for futures. So essentially what this means is if I just go ahead and remove all of these drawings from my chart, this time we are not given a set price range that Bitcoin is going to trade between. We are basically at this point trading the entire chart. Now, the way that this works is we can either go long or short once again, as we are trading futures right here. But let's just go long for this example, as it's easier to explain. So how the Martingale strategy works is we would place a position right here at the current price of Bitcoin. So we buy right here. Then if the price in this example for this specific bot falls by 0.5%, so once again, this isn't drawn to scale, but let's just say we fall to here. What this is going to do is buy 1.2x the amount of Bitcoin that we originally bought. So we're going to buy more Bitcoin when the price falls than the original position. So obviously we take the original position right here. And then because we bought even more at this level, what this is going to do is drag our average down to around about here. Once again, this is not drawn to scale. This is just an example. So we bring the average price further down. Then let's say that we fall again, once again, another 0.5%, as that is the position decrease. So let's say that we fall to here this time. We are going to buy another 1.2 times the previous investment. So it's not 1.2 times this investment, it's 1.2 times this investment, where we already bought 1.2 times. So this time it's going to bring our average position once again down to here, somewhere around here. The idea behind this strategy is we buy more every time that price moves against us to bring this average cost lower down. And the reason that we do this is so that we need less of an uptrend to actually make profit. Because think about this. If we bought here and we just remained in this position and we didn't buy more, well, the Bitcoin price needs to go all the way back here and above this level to now make us into profit. Whereas because we average down with more each time, all Bitcoin has to do right now is go up to like here. so the price doesn't need to move that far. Now we can see right here with this specific trading strategy, the profit that we are targeting is 3%. So essentially what this is going to do is it's going to wait until we are 3% in profit. Let's say that's up here. And then we are going to sell the position right here and we are going to make a profit. So with this, you can see that yes, this is going to make us money if it moves in the right direction. But if we had like a terrible downtrend of Bitcoin right here, and we are buying at every 0.5%, we buy. Now, obviously, this is not drawn to scale because we do know that Bitcoin would fall. It never just goes straight down, does it? It never just goes down, and we buy at all these positions. At some point, it is going to come back up. And if it does, then we could definitely get a chance to move out of the position for a profit, even if the overall trend is down. However, it's just not going to be as good, and you are not going to make anywhere near as much profit as if you predicted the movement of the price correctly. So this is where long and short come in. If you think the price is going to move down, the long-term direction of the trend is going to go down, then go short. If you think the long-term direction of the trend is going to go up, then go long. And this is basically how you maximize your profits. If it goes up, something like this, then of course we are just going to buy more and more as the price moves down, and then we can sell as we go up. If the price goes down, then we buy more and more as we go up, and we can sell on the downtrend. So that is basically how the Martingale strategy works right here. Once again, we can choose from all of these different options that are going to give us all of these different strategies. So these are only really for short positions, but you can just flick this to long as well. Alternatively, we can set this up manually. We can choose the price decrease. So how much does price decrease before we make another investment? Let's say 0.5%. The position multiplier, so how much more do we buy each time we take a new position? Set this to like 1.5. Max additions per round, so the maximum we can actually buy is 10 per round. So let's say that we predicted the trend wrong, and we said that we think Bitcoin is going to go up. So we actually, in this position, we went long. But the price goes down, and it continues to go down. And it's really bad, this trade is terrible, and we don't make any sells. But in the meantime, we buy 10 times on the way down. Well, 10 is the maximum amount of times that we can buy before the bot just shuts off, and we don't buy any more until we are profitable again. So that right there is the Martingale strategy. Then the last type of bot that we are going to speak about, the last type of bot that is on Bybit, is the DCA strategy right here. Now, DCA stands for dollar cost average. And unlike all of the other bots that are clearly trading bots, so these are all trading bots right here, we are just trying to get in and out of the market to make a profit. The DCA bot is actually more of an investment bot, so it's very different to all of the other bots that we have spoken about. Essentially, the way this works is you can just choose a coin to invest in, and then you can choose how often you want it to invest so that you don't have to keep coming back to Bybit and buying into the market. So dollar cost average is a fantastic strategy for investing in the long term. And essentially what we can do is we can choose the currency right here. Let's go USDT. And let's say we want to invest in Bitcoin. So what I could do is I could enter in here, I want to buy 100 Bitcoin. Then I can choose the investment frequency. So I can say every week. Every week, I want to buy 100 Bitcoin, no matter what the price is at, and I just want to store it in my account. So once again, this DCA bot is not futures. We are not trading with leverage here, and this is specifically for investing. So I could buy 100 Bitcoin every week, and then it's just going to store it in my Bybit account. I'm going to hold it in my Bybit account until eventually I want to sell. So we can choose from any of these currencies right here, and we have a lot of coins that we can do this DCA bot for. The only thing to keep in mind is just make sure that your account is funded. Make sure you always have enough funds to make the trade. And then by default, every single week, or whenever you set this to, let's say 2 weeks, every 2 weeks, the bot is automatically going to buy 100 Bitcoin and just store it in my account. So those are all of the bots explained right there. Now, if we go back to the homepage right here, we can see some backtest recommendations. So essentially what this is Bybit's AI, which they call Aurora. This has basically scanned the entire market, and this is going to show us some of the best trading strategies that have worked over the past 2 weeks. Now, this APR can be very exciting. Like, you can think, oh my word, if I invest in Dogecoin right now, I can make 1,900% over the next 2 weeks. That is not how APR works. What this means, and I think it can be pretty misleading that crypto exchanges actually put this on, but hey ho, what this really means is if Dogecoin trades exactly the same as it did over the past 2 weeks for an entire year, that's when you make your 1,900%. So it by no means means that if you invest in Dogecoin, you are going to be making this over the space of a year. In fact, you can, of course, even lose money. What it means is if the market conditions stay the exact same, Dogecoin trades the exact same as it did over the past 2 weeks for an entire year, which is definitely not going to happen. That's when you can make your 1,900%. So keep that in mind. It can be pretty good to see how price is trading recently, but it is definitely not a long-term prediction for the future. But what we can do is we can see the APR right here. We can see what this is. So this is futures grid. This is futures Martingale. This is futures Martingale. And if we want to refresh these and get some new in here, well, we can refresh and see some more options. So I can see right here, Sol on futures Martingale. I can click into use this. It's then going to show me everything that I need to know about this, the price increase, the multiplier for the Martingale strategy. And if I want to invest in this, then I can just type in how much I want to invest, click on copy, and that's going to copy this trading bot and all of its parameters. So those are the recommendations by Bybit AI. But if we scroll down here, we can see some hourly top picks. So down here, we can see how long the bot has been running for, how many people have copied this bot, and how much total ROI this bot has made. So we can see right here, MyRo USDT. This bot right here is a futures grid. It's 20x long. And in the past 103 days since this bot has been running, this bot has made an ROI of 1,900%. So that is a difference. ROI is different to APR. APR basically says this is how much you could potentially make in 1 year if the market conditions stay the same, which they probably won't. But the ROI shows how much has this bot actually made since it has been running. So since this bot has been running, this bot has already made 2,000% in the 100 days that it has been running. So once again, if you like the look of any of these, you can just click on copy for free. It's then going to take us over to this screen, show us the price range, what type of bot this is, the profit grid, everything that we need to know so we can enter in the investment, click on create now, and then we can copy that specific bot. So that is my tutorial on the Bybit trading bot. If you found this video valuable, don't forget to smash that like button and tap that subscribe button. And until next time, take it easy.